Hi everybody, thank you very much for joining us for today's session on what's so great about pensions. I'd like to give you a few seconds to read the disclaimer before the session itself starts. I hope you find the session useful and I hope you enjoy it. Have a great day. Hi everybody, my name is Abraham Ace. I'm a Chartered Financial Planner with Atticus Financial Planning. Thank you very much for joining us for today's session on what's so great about pensions. I get asked this question all the time. My clients say to me, "Oh, Abraham, you're always carrying on about pensions. I don't understand what's so great. They're locked up till I'm 55. I can't get access to my money. I hear rumours that the returns aren't great. I hear that they're expensive, etc., etc., etc." And a lot of these things just aren't true. So I thought this is a great opportunity just to highlight 7 really good reasons for investing into a pension, making those contributions and building up a pension pot. And one of those key benefits is with the tax relief. So if you make a contribution to a pension, you get tax relief on that contribution. At 20% if you're a basic rate taxpayer, 40% if you're a higher rate taxpayer, and 45% if you're an additional rate taxpayer. Now, I think that's fantastic because you're up. You make that contribution into the pension and you're already up by at least 20%. Now, if I went to any person out there and I said, "Tell you what, I've got this investment, and the moment you put your money in, you'll get 20% return immediately," the first thing they'd think is I'm a crook. And the second thing that they'd then do is they'd say, "Wow, I want to get in on that." And that's exactly what's happening with a pension. You make the contribution, you get the tax relief, you've got an automatic return. Right, the next benefit number 2, is that you get tax-free growth. So while your money remains invested within the pension wrapper, the majority of the growth that you get is tax-free. And the benefit of that is that the money that you would have paid out in tax stays invested and you get growth on that money. So that actually accelerates your growth. And if you think of the impact that must have over the time that most people are invested in a pension, that's most people 30-40 years, that accelerates the growth and increases your return substantially. So once again, another fantastic benefit. As we all know, you can take up to 25% of your pension as a tax-free lump sum when you retire. Now, once again, a really useful benefit. What some people do is they take the whole lump sum out at the beginning and they use it to, say, pay off their mortgage. What other people might do is they take it incrementally. So they take £10,000 of tax-free cash this year, and then £10,000 of tax-free cash next year, and then £15,000 the next year. So once again, it's a tax-free benefit, which is very tax efficient, but it's also very flexible. All right. So that money that you've built up in your pension here at benefit number 4, it doesn't form part of your estate for inheritance tax purposes, which means that it's IHT exempt in most cases. And that's really beneficial because actually pensions these days can be the biggest asset that someone owns, if not or the second biggest. It's a substantial amount of money. So having that exempt for inheritance tax purposes, it can be financially beneficial, really, really financially beneficial. And that will tie into the death benefits when we look at that in a few points' time. So the benefits as well, since 2015, how you take your pension has become really flexible. So for people who are far more concerned about security, what they might do is they might use their pension to buy an annuity. So you're basically buying an income for the rest of your life, which will be paid to you for the rest of your life. And that's very secure, and all the risk sits really with the company that you bought the annuity from. For other people, what they prefer is they'd actually prefer to have greater flexibility, for example, and potential for growth. So they don't buy an annuity, they leave their money invested within the pension, and then they draw an income out from the capital and the returns that they actually get from their investments within that pension. And that's called drawdown or flexi access drawdown. And once again, you've got incredible flexibility in terms of how you draw down your income with that situation, where you can take out 10,000 one year, 15,000 one year. You can mix it with your tax-free cash, for example, or what some people might do is they might use half their pension to buy an annuity to give them real security of income, and then use the other half to provide an income through drawdown. All right. Now, death benefits on pensions these days are really fantastic. As I said earlier, your pension is exempt for inheritance tax in most cases, but also you can leave your pension to anybody that you want to now. You can leave it to your partner, you can leave it to your children, you can leave it to a charity, you can leave it to nephews and nieces, you can leave it to multiple people, and it will pass to them. In some cases, it can pass them free from any tax whatsoever, depending what age you are when you pass away. And to give a bit of perspective around that benefit, if you've been the main breadwinner through your whole relationship and you've built up the main pension pot and you and your partner are going to be relying on that to pay for your retirement, and then you suddenly die, it's really beneficial that your pension is able to pass through to your partner. And in some circumstances, they could draw an income from that pension for the rest of their life completely tax-free. So a really solid benefit there. And then lastly, it's a fantastic way to take cash out of your business tax efficiently. So a lot of my clients, they've built up a business, they've been really successful, and because of that success, they've built up cash within the business. And what they want to do is they want to take that money out, but they know if they pay it to themselves as a salary, they've got to pay national insurance on it, the business has to pay national insurance on it, and they have to pay tax on it, which they're not overly keen on. They can pay it to themselves as dividends, which might be more tax efficient, but actually they still have to pay tax on it, so they're not overly keen on that either. But what you can do is you can pay that cash out to yourself as as pension contributions. And when you pay those pension contributions, firstly, the business can write those off as a business expense, so those contributions can be offset against corporation tax. Secondly, the business doesn't pay national insurance on it, you don't pay national insurance on it, and it's paid free from any tax. The contribution is made out of any sort of pre-tax income that's paid to you, so it's paid into the pension free from tax. So it's really tax efficient. A really nice way of taking money out of the business, and under the right circumstances, you could theoretically make a pension contribution of £160,000. So once again, that's a sizable amount of money to take out of a company. Now, depends on the circumstances, it's really important to take advice on that, but it just highlights another benefit. So I think I've highlighted here 7 really good benefits. The tax relief that you get up front, tax-free growth while you're invested, tax-free lump sum that you can take out of the pension, it's inheritance tax exempt, you've got really flexible benefits and how you can take your pension benefits, there's really good death benefits, and it can be used to take cash out of the business. So 7 really good reasons to utilize the pension. If you've got any questions, don't hesitate to give us a call. Our contact details will be up on in a couple of slides' time. Thank you very much for joining us today, and have a great day. Thanks very much for joining us today. If you'd like any further information, all our contact details are below. Feel free to get in touch with us anytime. Have a great day.